All right. So let's dive into all these Kolte Patil Developers documents, right? They're for their second quarter of fiscal year 2025.
Well,
We've got a whole stack of stuff here. Unaudited, standalone, and consolidated financial results, even their investor presentation.
oh, wow.
It's like we're kind of financial detectives, you know?
Yeah.
We're looking for clues about this company's performance,
Hmm.
what it means for, someone who's interested in the Indian real estate market.
I like that analogy.
Yeah.
There's definitely a lot to uncover.
Yeah.
So Kolte Patil's a pretty big player, right? They're known for their projects in Pune,
Mm-hmm.
but they're expanding into Mumbai and Bengaluru too.
Okay.
And they're catering to pretty diverse range of buyers. So everything from affordable housing to those luxury high-rises.
Oh, wow.
And they've even got distinct brands. So they've got Kolte Patil for the mid-income segment and 24K for their premium offerings.
Okay, so they're covering a lot of ground.
Yeah.
But how are they actually performing? Like, what's the story that the numbers tell us?
Well, their Q2 FY25 results show some pretty impressive figures.
Okay.
So their sales value jumped 11% year over year,
Wow.
reached 770 crore rupees.
Okay.
Even more interesting is their average realization per square foot
Mm-hmm.
saw a healthy 16% increase.
Okay.
Now, what really caught my eye was their net debt.
Okay.
It's actually negative,
Really?
sitting at negative 58 crore rupees.
Negative net debt. That's pretty rare, isn't it? What does that tell us about their financial health?
Yeah, it's definitely a sign of strong financial management, especially real estate, right?
Yeah.
It means that they've got more cash on hand than they have outstanding debt.
Right.
So for you as a potential investor, this translates to greater financial stability and potentially higher returns.
Right.
Because they've got more flexibility to reinvest that in growth or even distribute profits.
Okay, that makes sense. Yeah, it sounds like they're in a really solid position.
Yeah.
Now, where is all this growth coming from?
Their investor presentation points to a strategic shift. So they're aiming for a 70-30 split between Pune and the Mumbai-Bengaluru markets.
Okay.
While Pune is still their stronghold, they're recognizing the potential growth in those other big cities.
So they're strategically positioning themselves to capture a bigger slice of the pie.
Exactly.
Yeah.
They're projecting a 25% sales CCR over the next few years.
Okay.
Ambitious, but given their track record and the projects they've got in their pipeline, it's achievable.
Speaking of pipeline, they're aggressively acquiring new projects.
Yeah.
Their investor presentation mentions a top-line potential of 8,000 crore rupees just this fiscal year.
Yeah.
I mean, that's a bold statement, wouldn't you say, about their confidence in the market?
Absolutely. But it's not just acquiring any project, right?
Okay.
Their focus on society redevelopment projects in Mumbai
Yeah.
is particularly noteworthy. These projects involve redeveloping existing properties,
Okay.
which often requires less upfront capital expenditure compared to starting from scratch.
Ah, so they're being smart about their capital allocation.
Yeah.
And this allows them to tap into prime locations in Mumbai, right?
Yeah.
Where land acquisition is incredibly expensive.
Exactly. It's a savvy strategy for capital-efficient growth.
Okay. All this talk about financials has my head spinning a little bit.
Sure.
What are some of the key things that jump out at you from their consolidated financial statements?
Okay.
What should we, or rather you, be paying attention to?
Okay, well, their consolidated cash flow statement shows a pretty robust operating cash flow.
Okay.
442 crore rupees.
Okay.
For the first half of FY25, this means that they're generating significant cash from their core operations.
Mm-hmm.
Good indicator of their ability to fund growth and meet their financial obligations.
So they're making money and managing it well?
Yeah, but their consolidated P&L statement also shows us a slight dip in EBITDA margins.
Okay.
So while the revenue growth is strong, understanding the factors behind this dip is key for you as a potential investor. Are they strategically investing in new projects that have higher initial costs, or are they facing pricing pressure in certain markets?
Those are excellent questions to consider.
Yeah.
It's easy to get caught up in the excitement of revenue growth, but understanding the nuances of profitability is just as important.
Right.
What about their standalone financials?
Okay.
Do those tell a different story?
The standalone numbers require a bit more context.
Okay.
So the standalone statement of cash flows shows a negative cash flow from operations.
Mm-hmm.
But remember, this only reflects the standalone entity, not their subsidiaries.
Okay.
The consolidated statements give us a much more accurate picture of their overall cash flow.
Right. We can't forget about the bigger picture.
Exactly.
What about their assets and liabilities?
Their standalone statement shows that their current assets, mainly inventory, significantly outweigh their current liabilities.
Okay.
This suggests they have a very strong liquidity position,
Hmm.
meaning they have ample assets that can be readily converted to cash to meet those short-term obligations.
Okay, so even though the standalone numbers might look a little different at first glance,
Yeah.
the overall picture is still very positive.
Yes. And there's one more interesting detail in these standalone statements.
Okay.
Kolte Patil has issued several series of secured, listed, and rated non-convertible debentures, or NCDs.
NCDs, could you explain what those are and why they're significant?
Of course, NCDs are essentially loans that are secured against specific assets.
Okay.
So think of it like a mortgage on a house.
Mm-hmm.
But in this case, the collateral might be project land or future receivables from those projects.
Okay.
For Kolte Patil, using NCDs allows them to raise capital without diluting their ownership stake.
Right.
And because these NCDs are listed and rated,
Mm.
they're traded on stock exchanges and assessed by credit rating agencies,
Okay.
which provides transparency
Mm-hmm.
and might appeal to a wider range of investors.
So it's a way for them to access more funding
Yeah,
while maintaining control and appealing to different investor profiles. And it seems like they're actively managing their debt profile.
yeah.
I noticed that they're redeeming some of these NCDs, like the Series 3 issued to Marubeni Corporation,
Yes,
a Japanese firm.
that's right. And this partnership with Marubeni is something that we should definitely explore further.
Yeah.
It's more than just lending. It seems like a strategic alliance
Mm-hmm.
could have significant implications for Kolte Patil's future.
Definitely. But before we dive into that, I want to step back and look at the broader market context for a moment.
Okay.
What can we glean from these documents about the overall health of the Indian real estate market?
Their investor presentation paints a pretty optimistic picture.
Okay.
So they highlight positive trends like economic growth, improved affordability, driven by factors like lower interest rates,
Mm-hmm.
and a growing preference for those lifestyle-oriented homes. All of these factors are fueling demand,
Yeah.
particularly in those segments that Kolte Patil is targeting.
They also mentioned the impact of RERA,
Yes.
the Real Estate Regulation and Development Act.
Yes, RERA has been a game changer for the Indian real estate market. It was introduced in 2016 to bring greater transparency and accountability to the sector. For organized and execution-focused developers like Kolte Patil, RERA is a boon,
Okay.
helps level the playing field,
Mm.
and it instills greater confidence in buyers,
Yeah.
which ultimately benefits companies with a solid track record.
So it seems like Kolte Patil is benefiting from these larger market forces and is well positioned for continued growth.
Yes.
But let's talk more about their strategic initiatives and how they're leveraging those favorable market conditions to their advantage.
Absolutely. They're placing a lot of emphasis on operational excellence and leveraging technology.
Oh.
So they're streamlining their sales and approval processes. They're accelerating construction timelines. They're even using tech to reduce their construction time.
I imagine in a fast-paced market like India,
Yeah.
speed and efficiency are critical.
Exactly. And they're also actively using their digital platforms as an incremental sales channel. In today's world, having a robust online presence is crucial,
Yeah.
especially in real estate, where customers are increasingly researching and touring properties virtually.
So they're adapting to the changing ways that consumers are interacting with the real estate market.
Exactly.
It sounds like they're firing on all cylinders.
Mm-hmm.
But before we get ahead of ourselves,
Sure.
what's your overall assessment of Kolte Patil based on what we've seen so far?
Well, I'm impressed by their performance.
Okay.
They've got a strong financial foundation.
Yeah.
They're making strategic moves to capitalize on market trends,
Mm-hmm.
and they're embracing technology to enhance efficiency.
Mm-hmm.
They're clearly a company on the rise.
I agree, but we've only just scratched the surface.
Yeah.
There's still so much to unpack, like their society redevelopment projects in Mumbai
Yeah.
and their intriguing partnership with Marubeni Corporation.
Let's delve into those next.
Okay.
So these society redevelopment projects in Mumbai, they're fascinating. It's like a really clever way to navigate the challenges of getting land, in a city as dense as Mumbai.
Yeah, it's almost like urban renewal meets like real estate development. Instead of buying expensive land, they're partnering with existing housing societies to redevelop those properties.
Exactly. These societies often have older buildings that need repair or modernization.
Right.
So Kolte Patil steps in, demolishes the old structures, and constructs brand new apartments or mixed-use developments in their place.
I imagine this is a pretty attractive proposition for the societies. They get like upgraded living spaces,
Right.
and Kolte Patil gets access to prime locations without having to shell out those huge costs to acquire the land.
Yeah.
Seems like a win-win for everyone.
You're right. It does seem that way, and their investor presentation indicates that it's a strategy they're actively pursuing.
Okay.
They've already completed 2 society redevelopment projects in Mumbai
Wow.
and have 5 more underway currently.
So they're not just dipping their toes in the water, they're diving right in.
Yeah, they're diving in.
Their investor presentation even outlines 14 society redevelopment projects in Mumbai in total.
Wow.
2 completed, 5 ongoing, and 7 planned for the future.
That's a significant commitment.
That's huge.
But it's not without its challenges.
Okay.
One of the biggest hurdles is getting buy-in from all the residents of the society.
Yeah, right.
You need a certain percentage of residents to agree to that redevelopment plan.
Yeah.
This can be a very lengthy and complex process, especially when you're dealing with so many stakeholders.
Oh, I can imagine. I bet there are disagreements about like everything from the design of the new buildings to who gets which apartment.
Absolutely. It requires a great deal of negotiation, compromise, transparency.
Yeah.
And then you've got the legal and regulatory hurdles on top of that.
Right.
It's a very complex web to untangle, but from what we can see, Kolte Patil seems to be navigating these complexities pretty well.
Okay.
Their growing portfolio of these redevelopment projects is a testament to their ability to manage those intricacies.
Okay, so we've talked about this unique redevelopment strategy. Now let's shift gears and explore their partnership with Morabini Corporation.
Okay.
What can you tell us about this collaboration?
It's an interesting partnership. So Marubeni, a Japanese trading and investment conglomerate, has invested in several of Kolte Patil's projects, including those Series 3 NCDs we talked about earlier.
So they're not just a lender, they're more like a strategic partner.
Exactly. And this partnership gives Kolte Patil more than just capital.
Okay.
They also get access to Marubeni's expertise in areas like infrastructure development and project management.
Right.
For a company like Kolte Patil that's looking to expand its operations and potentially venture into new markets, that kind of expertise can be invaluable.
It sounds like a mutually beneficial relationship.
Yeah.
From Marubeni's perspective, it's a way to tap into the rapidly growing Indian real estate market. And for Kolte Patil, it's an opportunity to leverage the knowledge and resources of a global player.
You got it. And what's even more interesting is this partnership seemed to be evolving beyond just financial investment.
Oh, okay.
They've recently expanded their collaboration with Marubeni, taking a more active role in project development.
Yeah.
And they're even exploring opportunities in renewable energy within Kolte Patil's projects.
Oh, wow. So it's becoming a more integrated partnership.
Exactly.
With both companies contributing their unique strengths to create a synergy that benefits both sides.
Precisely. And this raises an interesting question.
Yeah.
What are the potential implications of this partnership for Kolte Patil's future growth?
Yeah.
Could this be a catalyst for them to expand their operations more aggressively, maybe even venture into international markets?
It's certainly possible Marubeni's financial backing and global reach could open doors that were previously inaccessible to Kolte Patil.
Right.
And it's not just about financial resources.
Yeah.
Marubeni's reputation and experience in those international markets could also provide a significant boost to Kolte Patil's credibility and attractiveness to other potential investors and partners.
Absolutely.
Yeah.
Having a reputable global partner like Marubeni on board sends a very strong signal to the market about Kolte Patil's stability and growth potential.
It's a partnership worth keeping a close eye on.
Definitely.
Now, before we move on, I want to circle back to something we touched on earlier.
Okay.
Kolte Patil's dividend payout.
Yeah.
Their consistent dividend payments. It seems to demonstrate their commitment to rewarding shareholders, especially when you consider that alongside their strong financial performance and growth prospects.
It's a positive sign indeed.
Yeah.
It shows that they're not just focused on growth, but also on returning value to those shareholders.
Yeah.
This can make their stock more appealing to those income-seeking investors who are looking for that steady stream of dividends.
All right, so we've covered a lot of ground here.
Yeah.
We've explored their society redevelopment strategy in Mumbai, which seems like a really clever way to gain a foothold in a competitive market. We've also delved into their partnership with Marubeni Corporation, which could have significant implications for their future growth trajectory.
Yeah.
What are your thoughts on these strategic initiatives?
Well, I think they demonstrate a forward-thinking approach.
Okay.
You know, these aren't decisions that are made lightly.
Right.
And they indicate that Kolte Patil is not content with just maintaining the status quo. They're actively seeking out ways to expand their reach, improve their efficiency, and create value for both their customers and their shareholders.
It's exciting to see a company that's willing to take those calculated risks and embrace innovation.
I agree. And what's fascinating is how these initiatives seem to tie back to their overall commitment to sustainability.
Right.
Their focus on green building practices, for example, aligns perfectly with their push for society redevelopment and their partnership with Marubeni, who are also known for their commitment to sustainability.
That's a great point. It seems like sustainability is not just a buzzword for them, it's woven into their business strategy.
Exactly. And this brings us to another critical aspect of any business risk assessment.
Yeah.
Every company faces challenges.
Of course.
And understanding how Kolte Patil is preparing for those potential hurdles is crucial for anyone who's interested in investing in them.
Let's dive into that next. Okay, so we've talked about all the positives, but what about the potential risks? Every business faces challenges, and I'm curious to know how Kolte Patil is approaching that risk management.
Well, they've actually addressed this pretty transparently in their financial statements and investor presentation. One of the main risk factors they highlight is the cyclical nature of the real estate market.
Right, so even if they're doing well, now they're acknowledging that market could shift.
Yeah.
So what are they doing to kind of mitigate that risk?
Well, their strategy seems to focus on diversification.
Okay.
By expanding into new markets like Mumbai and Bengaluru, they're spreading their risk and reducing that reliance on just one region.
Okay.
Additionally, they're focused on being financially prudent, as evidenced by that negative net debt. Provides a cushion to weather those potential market fluctuations.
That makes sense. Yeah, spreading the risk and maintaining a healthy financial position can go a long way in navigating uncertainty.
Exactly.
What other risks did they identify?
Well, regulatory changes are another concern. The Indian real estate sector is heavily regulated, and shifts in those regulations, things like land acquisition or environmental clearances, could impact their projects and profitability.
It's like navigating a constantly changing landscape.
Yeah.
How are they adapting to that?
Well, they've emphasized the importance of staying informed and engaging with regulatory bodies to ensure compliance.
Okay.
They're also building strong relationships with government agencies and stakeholders to anticipate and navigate those potential changes.
So they're staying agile and building those crucial connections. It sounds like they're taking a proactive approach to risk management.
Yeah.
Which is reassuring, but let's not forget about competition. The Indian real estate market is getting more and more crowded. How is Kolte Patil differentiating themselves?
They are very aware of that competitive landscape. Their investor presentation highlights several initiatives, including a big emphasis on brand building.
Okay.
They've received over 60 awards in the past 5 years, recognizing their commitment to quality innovation and customer satisfaction.
Wow.
You know, this recognition not only enhances their reputation, but it builds trust with buyers.
It's like a stamp of approval that sets them apart.
Exactly. And they're not just relying on accolades.
Okay.
They're investing in customer experience initiatives, trying to exceed expectations throughout that whole home buying journey.
Right.
Plus, those strategic partnerships, like with Marubeni, give them access to expertise and resources that smaller players may not have.
Yeah, it sounds like they're building kind of a multifaceted approach to stand out in that competitive market.
Exactly.
Now let's shift gears a little bit and talk about sustainability. We touched on it briefly earlier, but I'm interested to hear more about how Kolte Patil is incorporating sustainable practices into their projects.
Their commitment to sustainability is really evident throughout their investor presentation.
Okay.
They're pursuing green building initiatives, focusing on creating environmentally responsible and resource-efficient buildings.
What does that look like in practice?
Well, they're incorporating a whole range of strategies, everything from using energy-efficient materials and appliances to reducing water consumption and minimizing waste generation during construction. They're also designing their buildings to maximize natural light and ventilation. Which reduces energy consumption, but also creates healthier living spaces for residents.
So it's a really holistic approach to minimizing their environmental impact.
It is.
It's great to see a company taking these concrete steps towards sustainability.
Yeah.
And their efforts are being recognized, right?
Absolutely. Several of their projects have received certifications from the Indian Green Building Council, which is a testament to their commitment to sustainable building practices. And these certifications are becoming increasingly important, especially as eco-conscious homebuyers are becoming more prevalent.
It's a smart move, both from an environmental perspective and a business perspective. Buyers are seeking out those sustainable options, and those certifications provide that added assurance.
Exactly.
Now, before we wrap up, I'd love to hear your thoughts on the broader implications of Kolte Patil's performance. What does their success tell us about the Indian real estate market as a whole?
Well, I think Kolte Patil's journey is a microcosm of the positive trends we're seeing in the Indian real estate sector.
Okay.
Factors like the growing economy, rising disposable incomes, rapid urbanization are fueling demand for housing,
Right.
especially in those major cities.
Hmm.
And government initiatives aimed at promoting affordable housing and infrastructure development are contributing to the sector's growth even further.
So it's a combination of those favorable market conditions and Kolte Patil's ability to capitalize on those opportunities.
Precisely their strong financial performance. Those strategic initiatives and their commitment to sustainability suggest they're well-positioned to continue on this positive path.
Yeah.
They've even mentioned plans to expand internationally in the future,
Hmm.
which is a testament to their ambition and confidence.
That's exciting to see a company with such a clear vision and the drive to execute it well. I think we've covered a lot of ground today.
We have.
We examined Kolte Patil's financial performance, explored their strategic initiatives, delved into their approach to risk management, and even discussed their commitment to sustainability.
It's been a fascinating deep dive. Hopefully you, our listeners, have gained some valuable insights into this dynamic company and its role in the evolving Indian real estate landscape. They're certainly a company to keep your eye on.
Absolutely. And as always, we encourage you to continue exploring and doing your own research. There's always more to learn and discover. Until next time, keep diving deep.